Be nice to do it with audio. There we go. Let's try that again. Welcome to Charts and Coffee, gang. Happy Wednesday, everyone. This is, for the most part, the last trading day of this week. We have a little bit of a session on Friday, but this is pretty much it. And we're looking at probably the busiest hot zone day. Cat. The cat is freaking out. Cat, would you knock that off? Somebody wants my attention really badly. All right, so this is the busiest hot zone day of this week. And take a look at the economic calendar here. What we have is basically FOMC meeting minutes, but everything else that would have been released throughout the remainder of this week is concentrated into today. Take a look at what's going on the economic calendar. Thanks, Bubba. All right. So thanks for punting with the cat. He just wanted out of this office in the worst way. All right. So what we have are all the data releases concentrated in a single day. So take a look. Hot zones galore. We're going to have a lot of volume volatility, and we are expecting this kind of sort of concentrated opinion for the remainder of the week. Friday, folks are phoning it in. They'll maybe be trading in between Black Friday deals. Who knows? But this is going to be it. So keep an eye on this calendar. This is Forex Factory, by the way. And the hot zones are really easy to find. The reason I began calling them hot zones is because of these little red icons, red hot zones. All right, gang. So with that in mind, that's the sum of what we're going to be dealing with today. Lots of economic data. So let's jump on over to the questions. I think I've got my toss charts here. We're going to kick this off with TradingView and our TradingView charts. And let's kick it off with the first question we have, which is, good morning. Hey there, George. The only major index that is broken above the 1-year downtrend is the Dow. Yes, that is the only green trend, as I like to call them, based on the combination of 4 moving averages. And yes, it's been in an uptrend since the 14th of this month. So absolutely. Is there any significance to this? Only the Russell, usually the Russell. So George, I don't believe in leading indicators. I don't believe in leading technical indicators. I don't believe that one index leads another. There always has to be context. So think about if the dollar remains strong for a prolonged period of time, the Russell is going to benefit, as opposed to more international companies in the Dow, the S&P, and the NASDAQ. The Russell, a group of 2,000 domestic small caps, which, by the way, most of those small cap stocks are not weighted in the other 3 indices in any way. So I'm not a big fan. I haven't found that to be true consistently throughout my career without the context of why might domestic small caps be stronger than international large caps or tech, etc. Anyway, that being said, again, just my opinion, but what we want to remember is think about what's inside the Dow. What's inside the Dow are financials, uptrend. What's inside the Dow is tech, not a downtrend, or not an uptrend, but not a downtrend either. So move tech aside, because tech is actually the weakest part of the market right now. Then we also want to look at the healthcare. Look at that. These are the sectors weighted within the Dow. Healthcare, uptrend. All right, what about transportation? Uptrend, fresh uptrend, and industrials, for uptrend. Now, when you crack open the NASDAQ in a similar way and look at XLK, XLC, and XLY, so tech, communications, and consumer discretionary, you'll see we don't have this structure. This is why the Dow is up, right? It's just that simple. So I'm not really worried about whether or not, for example, RTY or IWM is moving. because it's not in any way weighted like the other three. So I know that that's one of those things I've heard out there for a long, long time, but believe me, you're far better off looking at what's inside the index and the structure of those sectors and ultimately stocks to figure out why that index is moving higher. And keep in mind that the Russell is not a high concentration weighted index. It's not high concentration at the sector level nor at the stock level. In other words, those 2,000 stocks are roughly weighted very, very low and very, very similarly. So there's not a leader within the Russell itself, right? There's no sector that's got a disproportionate amount of influence over the remainder of that index and those 2,000 stocks. So thank you for the question. All right, next up, good morning, Prince. I got out too early on the ES trade yesterday. Too early. Did you get a profit out of that thing, my friend? So for those of you that may not have caught this video, boring day trades. Yes, that's me, world's most boring day trader. We had two amazing trades yesterday, long bonds and long the S&P. And if you haven't checked out this video, then this is really a great look at sort of the environment within the Sector Secrets Mastery and the futures room when I'm in there, which is we keep notes running on the left there, as you can see, and then I'll walk through the trades. And if you're curious what kind of boring trades we put on and what that even means, check out yesterday's free video, boring day trades in the S&P and bonds. If you took any kind of profit out of that, Prince, always use one very simple test, gang. For your trades. Is there more money in your account at the end of the day or the end of whatever session you're trading than there was at the beginning of it? And I think that's a really great way to keep focused on progress and not perfection, right? Okay, so I wanted to know if surf the wave is valid every time it dips back into the wave, and also why wasn't the first target the value area high? Because it wasn't. I'm not, there's always, so first of all, there's no such thing as always, right, in the markets. It has to be under the right structure. And when it comes to upside targets, I'm going to use a number of different things that I'll consider. Bonds and S&P are moving quite strongly. We see components within the index moving strongly. I'm going to use my judgment and look at the different levels of resistance. Now, when I say judgment, this is not intuition. This is not my gut. We have obviously at any given time numerous levels of resistance or support that we can consider. And, ultimately, I'm going to make a decision about that based on all the other things that I see. So please, gang, number one, you're not going to see everything I see in the beginning. This is why I call trades out in the room, right? And two, I think the best way to learn what I'm doing is look at the notes and just attend the sessions. And you'll start to see the rhythm in there because I'm very systematic. There's a methodology to everything I do, but there's no single level, right? I don't want anyone thinking we can put a template over the market and just say, okay, value area high is always going to be the target. It can be a target. It doesn't have to be the target, right? And obviously in charts and coffee, I'm not going to go rehashing into how every little detail is determined. I hope you understand. Okay, hope that was helpful. Who's the jazz pianist, Frank? I actually bought this music, the license for it, some time back, and I don't remember, but it's I do love it. I bought two pieces of music from this service, and I think it was by the same person, but it reminds me a little bit of my beloved Peanuts opening song, and it's just a happy song in the morning, isn't it? All right, next up, I have a question on SPX strike prices. SK, I don't trade the SPX, but I'll see what I can do. I see that calls for today near 4,100, 4,110, and 4,120 with 10 points wide, which is about 2% from current price. Can we understand something from that? SK, I'll be honest, I have no idea. I don't trade SPX. I love trading ES futures. I have volume that I can use at ES futures, so I can see the opinion at those levels. So even when I'm trading SPY, and some of the members within our Sector Secrets Mastery will trade SPX, we're looking at the S&P futures because the SPX is not going to do anything that different from what the S&P futures, which is nearly a 24-hour market, is going to do, right? It's going to be very, very similar. And I have more tools and more data to make decisions based off of the ES. And then once I've found a setup or a level on the ES, when that criteria is met and that price trigger is here, I can then choose to take that idea and execute that idea in the, um, oh, did I, hang on one sec here. Here we go. Did I take myself? Where did I go? There we are. That was weird. Oh, I didn't know I could take myself out of the picture. Oh, how cool is that? I did not know that. Learn something new every day. But anyways, I wasn't sure if I cut my audio out. Sorry about that, gang. So what I try to remember is I'm going to look at one. I was gone, yeah, but the audio was there, right? So what I'm going to remember is I can look at the ES. Let's pull that up. I can look at the ES, right? And then make a decision about MES, calls or puts in the ES futures. I can make a decision about SPY. I can also make a decision, as you mentioned, about SPX, but I actually do not analyze. So maybe that might be something to ask one of our other traders here at Simpler who do actively trade SPX. But I have found the most effective way to make a decision about any of the different variations of S&P 500 is look at the ES futures first, and frankly, only, and then execute the idea elsewhere. All right. Okay. Next up is natural gas setting up like gold? Well, if you mean by in terms of structure, I'm not quite sure why that pairing, Mr. Walker, but is natural gas setting up like gold? It's a rather cryptic question. I'm not quite sure where you're coming from with that one, my friend. Natty gas has shot up higher. A lot of times when that is happening, there's either some geopolitics at work, which I'd have to take a look and see if that is, in fact, what we're dealing with, or there is weather coming, because this time of year for natty gas to move higher, oftentimes it's going to be the EIA, the Energy Information Administration, increasing the heating degree days, meaning we're expecting a little bit more harsher a winter, or there's going to be some kind of geopolitics affecting it. I don't know which it is, but I have not been trading natural gas at the moment because where it was in the last handful of days was not at, say, a negative half or negative one standard deviation. And on the way higher, I'd look for a +1 to maybe +1.5 standard deviation for where the resistance might be within the context of this chop. So I have a feeling this is going to be something with Russia. All right, just the way that it's moving. This looks very kind of, oh my gosh, geopolitical kind of thing. And crude is not moving, so it's on an energy play overall. So I'm not quite sure what the similarity is, but we're short gold, and we hit a first target, well, at least an optional one yesterday, and I'm going to continue to look for the short side in gold until we hit our target. And gold is a short that we have open right now. So I'm not playing energy, but we are playing energy stocks, and that's something we'll continue to look at. So crude oil heading lower today. We'll have to see how that's affecting our Halliburton and ConocoPhillips positions. All right, next up. Let's see here. Oh yeah, speaking of ConocoPhillips and Halliburton, I do want to show you all really quickly what we're looking to do. And yeah, it looks like pre-market we're going to be down just a little bit, but it doesn't invalidate what I'm looking for in terms of higher highs. The overall movement of crude has been, as of late, and I'm looking at some news here on my other screen. The news as of late has been very much OPEC, and my gosh, I'm seeing a lot of news out of Ukraine, Russia. I'm just seeing just kind of blurbs. I'm not reading them too closely yet. Gas withheld in Ukraine is Moldova's reserves. You know, you get news like this, you don't even have to fully understand it. I'm not going to say I do, but we know there's going to be a particular kind of reaction based on that. OPEC came out the other day and said they want to think about increasing production. Who knows what the narrative today is? But that was on the 21st. That was on Monday. And they were thinking about increasing production. There was no number given, nothing. There's no detail. It was just something that ran early in the morning. Crude sold off, rallied the very next day, and here we are chopping about. I like the fact that we continue to find support at the Darvis and here at the -2 standard deviation of the V-score, because that tells me we might not get the follow through to the upside right away, But as long as support holds, floors invite support buying, and support buying then usually begins to instigate momentum buying. So these are things to keep an eye on. All right. So am I going to continue to stay in Halliburton and ConocoPhillips? Yes, because both those positions are still intact for me in terms of the risk. And look, when an OPEC news, like we're going to some vague suggestion of increasing output, I'm not going to let data like that shake me out. I don't think we exceeded. If we did, it was very briefly and by very little, the 25%. And ultimately, I think most of the position was fine around that area. And that 25% is really important, gang, because a lot of traders, when they're playing long calls, long puts, will accept this notion of max debit. Please don't do that. There is no reason to chronically risk every dollar of a call or a put that you have bought, because most of the time, at some point, and rarely exceeding 50% of the premium, once you've lost half to a quarter of premium, there's a couple of things at work. Either the momentum is turned abruptly against the position, or theta decay, the time decay, has begun to erode the value of an option, which is, of course, a depreciating asset. So what we want to remember is there is a consistent way we can say, do I want to risk max debit? Which, by the way, is really just A, lazy, and B, an exercise in denial. Because as long as there's time, maybe it will come back. And we know that the brain loves to remember that one time the option looked like it was just about destroyed and all of a sudden it came back, right? But most of the time we end up taking a very, very unnecessary sized loss. Think about keeping your risk at a certain percentage of premium paid. It will serve you far better. And that's what I tend to do with my options trading. I say tend to do. That's how I build my trades when it comes to options trading. Getting long calls, long puts. All right, next up is, oh yeah, thanks, gang. I wasn't sure. I didn't know that I can make myself disappear. That's a magic trick. Yeah, okay. All right, next up, should we short Tesla when it reaches the lower wave on the daily time frame, as it is a bearish trend? All right, let's take a look. So we'll go to the daily time frame of Tesla. And yes, this is a beautiful established downtrend. Praveen, absolutely. You can look at XLY as well. Tesla and Amazon are both in downtrends, and these are the top two weighted stocks within the XLY, the consumer discretionary ETF. So yes, if you want to short a rip in Tesla, go for it. I don't have a problem with that whatsoever. It's valid structurally. Yeah. And I'm not saying, anything other than Tesla's a downtrend and short the rips the strategy. I'm not making any commentary on the company, the cars, a target, nothing. This is simply, let's just follow the trend. Let's follow the path of least resistance. So Praveen, yes, absolutely. Yeah. All right. Chris asks, durable goods at 1% versus 0.4 this morning seems high. How do I interpret the report? I don't, Chris. So yeah, great question. What I want to do is, let's go on over to that data point. Gang, durable goods, these numbers, I'll tell you, for the most part, just gobbledygook to me. The number that matters is what time is it going to be released. That's the number we want to keep an eye on. It's good to know what the expectations were. And then once the actual comes out, was it above or below? That's certainly something we can keep an eye on. What the most important thing to do for me when we have a hot zone is, say, pull up the S&P 500 and look at the action at 8:30. How did the market interpret that? Typically, when we see a durable goods number high, that's indicative of what? Higher prices. That's going to end up in the inflation category of the things that the Federal Reserve is watching. And if we see any tick up in things like PMI, durable goods, PCE, CPI, that would then communicate to us, traders and investors, that the Federal Reserve needs to continue to be vigilant against inflation. And that would suggest that we're going to see the higher end of the target rate probability. So we take our browser over to the CME FedWatch tool. We go pull up May and we ask ourselves, and this is exactly what I would anticipate is happening when traders and investors see this. What they're factoring in to the Fed funds target rates is definitely a higher probability for this column of 5 to 5.25. And as of today, 5.25 to 5.5, which is going to be generally bearish to equities, is taller than 4.75 to 5. Remember, not but a few days ago, this was the tallest column. This was the second. So look how much it's changed with some of the data that's come out. Now we have FOMC minutes, so this could be very different by the end of the day. But when this is the order, equities are likely to be a little weak. When we are a little bit more here than here, equities will remain stronger. And then finally, in terms of combinations, if this is the order, equities are going to remain and bounce as they have the last week or so. So what order in which these three columns are measured makes a big difference in terms of how hawkish do we expect the Federal Reserve to continue to be. All right, gang, and that is a wrap. As always, gang, thank you for joining me for Charts and Coffee. All right, caffeinate and dominate, gang. It's going to be a very busy day. Lots of data to contend with, all ending with the big finale. It's like fireworks today. The big finale and the fireworks is going to be the FOMC meeting minutes at 2 p.m. Eastern. Some of you probably know I do a Charts and Coffee, typically a longer session on Thursdays. It's Thanksgiving, and I love doing a Thanksgiving episode of Charts and Coffee. So yes, I will be broadcasting tomorrow, same time, same station. I will see you then for those of you that have time, and bring your questions. We usually go for a good 30, 40 minutes for our Thanksgiving version. All right, gang, be good to each other. I'll talk with you soon.